Good morning once again, everyone. Thanks for being here. I truly, truly appreciate it. It's always humbling when you come in on a Saturday and there are actually people here. Um, it, it, you can't even imagine how much that means to me. This morning, I wanted to talk a little bit about we kind of were talking about this in Right Way Options this week a bit, and the idea that activity does not equal results. And we're going to explore that just a little bit and see if we can improve our results with just a little bit of thoughtfulness in our trading today. So, this is the only slide you're going to see. We're going to jump to just doing a little bit of thinking, a little bit of math, maybe, and thinking about the things that we can do to actually improve our results in trading. I don't know where any of you, excuse me, are in your trading career, um, what your kind of results and things are in trading. But let's imagine that, and the reason I bring this up is this is pretty common. When I talk to people and have them come to me for coaching and things, we talk about this kind of thing. And oftentimes when I ask people, what's your trading ratio? Most people tell me, well, I win about half of my trades. So that means essentially we're winning. We're winning if we trade 12 trades over the month. We're winning 6 trades. We're losing 6 trades. Now, I don't know if anyone in here is kind of in that situation where you feel like you're only winning about half as many of the trades that you take, and you're losing about an equal amount on the other side. And when you think about it, it's pretty standard. It happens a lot. People do this. Now, when we're a 50-50 trader, is it going to improve our results if we just work harder doing the same thing? If we just push harder doing the same thing, is it going to improve our results? Now, one of the things that has always been important to me is the efficiency of my work and my effectiveness in my work. And oftentimes we see this during the day. The market's open, and isn't it true, even if you're struggling as a trader, the only thing that's on your mind at that point in time when the market opens is finding a trade, right? One of the most common questions that I hear from people when they first join the service: how many trades per month do you do? Instead of asking, how many winning trades versus how many losing trades do you have? Wouldn't that be the more important question? They're just worried about how many trades they're going to get. Now, does that make any sense if we're not winning very many of those trades? Of course not. And what we find, or what I find, is most people are focused in the wrong place. They want the activity, but they're not working to improve their results. So if we want to improve our results, how do we go about doing that? If we want to start actually seeing, that's right, quality versus quantity, right? We want quality trades, not quantity of trades. And it's interesting that what we do day by day as traders, the market's open, and we're just racing around like we cannot wait to risk our money in the market. And what I want to talk to you about is just some simple concepts here on how you can improve that, and realizing that quantity of trades is not nearly as important as the quality of trades, that activity does not equal results. We're not going to see an improvement in our trading unless we fix the problems that are creating that situation where we're losing as many trades as we're winning. So first off, it starts off with a plan, and I'm just going to start with a fictitious account. Let's say we've got a $30,000 account that we're trading. We have to start out with some rules and some guidelines. How much are we going to risk of this account in any one trade? Now, you guys know when I trade options, I usually tell people to use an average of somewhere between 3 and 4% of their account for their trade size. And let's talk about that for just a second. That would mean at 3% on this, I could do $900 trades or up to $1,200 trades. Okay, somewhere between $900 and $1,200 that I would put into an individual trade. Now, let's just put this out and make a nice round number that we're going to risk $1,000 on a trade. Now, why is this important, guys? Why is it important to kind of have your trade sized about the same? Well, isn't it true? Sometimes we take trades that are very large trades, and sometimes we take trades that are very small trades. Well, what happens with that? What happens if you take that larger size trade and you lose on that trade, and the winning trades of those little trades that you're taking, are you going to ever catch up to your losses if you do that? No. And that's why we need to be thinking about a standardized size for our trades. Okay? If we have a standardized size for our trades, then we have something equal that we can actually create some stats on. Okay? That we can make some results reflect. See, if we're trading size trades that are all over the map, then it's virtually impossible for us to put together any kind of consistency in our trading. Would you guys agree with that? How are we going to have consistency if our trade sizes are all whacked out all over the place? Because we're going to have outsized losses or outsized winners on some trades, and we'll never get any kind of consistency or balance in our trading. You guys agree? Makes sense? So we need to have, now that doesn't mean you have to be perfectly to $1,000, right? I mean, remember, we're not, if it's $925, it's $925 for the contract or 2 contracts or 3 contracts, whatever it is. But that's, we get into that reasonable range. So we're risking about the same amount of money per trade so that we can have a basis to work from. Okay. Now, I'm not talking about risking that $1,000. What I want to talk about is how much of this $1,000 do we want to risk? Okay, we're going to put $1,000 into each trade, but that doesn't mean our stop loss. Okay, so I'm just going to come up with a number here. You guys could figure this stuff out yourself, but let's say I'm risking $1,000 on a trade. I may have the risk tolerance that allows me to risk $200 on that trade. So that means I could lose $200 here, come out with $800 at the end, and I'm still okay. Okay, that's 20% loss. Okay, so I'm taking a 20% loss on this trade. Does that sound reasonable to you guys? And remember, you'll have to go through against your account size and figure this out for yourself. What is the right trade to use? What is the right risk to use for a trade? Maybe you've got a little bit higher risk tolerance. Maybe you've got a little bit lower risk tolerance. Okay. But in this situation, Do we have a position? Here's the thing. No one likes to lose money, right? No one likes to lose 200 bucks. There's not a soul in here that wants to lose 200 bucks. Okay. But if we use some rational thinking, if we lose $200 on a $1,000 trade and we relate that to our actual account, is this a recoverable trade? Can we recover from this? Yes, right? It's a recoverable situation. And that's where we always want to be. We want to be in that recoverable situation, because if we trade outside of that comfort zone, that recoverable situation, we're always off balance. Right? That's where emotion kicks in. Can you guys see what we're trying to do here? What I'm trying to put together here is this idea of a business plan. So that we have a framework within where we're going to be. How are we going to trade? Okay, that starts building us this framework. I like to call it, staying in my lane. Okay, if I'm driving down the road and I go over the dotted line too far, I risk running into a head-on collision, right? If I go too far right and slide over past the white line, I run the risk of running in the ditch, rolling the car. Both situations, pretty brutal, right? Potentially kill yourself. Well, the same thing is true in trading. If we don't understand what lane we're driving in, we're wandering all over the place. We're wandering into head-on collisions. We're wandering into the ditch. And what we want to do is make sure that we have this framework that keeps us consistent, staying in our lane, that comfort zone where we are. Okay? And that's what we're doing here. We're building this framework. Okay? Now let's take this a step further. And let's say that we're just, we want to think about what we're trying to achieve every day, because we've got part of this lane figured out. We know our trade size. We know how much we can risk on a trade, but we haven't figured out what we want to try to achieve. You guys ever heard of Stephen Covey? Stephen Covey wrote a book, years and years ago. And the whole idea was to be results oriented in your trading. And he really went with that theme that, you can be very, very active. You can have lots and lots of activity, but if it's not focused, 7 habits of effective, 7 habits of effective people or something like that. We can have lots and lots of activity, but if it's not results oriented, if it's not focused, we can chase around a lot, but we don't go anywhere. Right? And if we're 50-50 traders, isn't that really the case? If we're only winning about half of our trades, is increasing our activity going to change that? Probably not. We want to start looking for the ways that we can be better in our trading, right? 7 habits of highly effective people. That's right. And so activity does not equal results. What results, we have to focus at the end game. What are we trying to achieve? Okay. And I always like to steer people toward, particularly in options, a goal. So if we use $30,000 as our starting place, and we say a 20% return at the end of the year would be an acceptable return, that would be nice to achieve, then I can start calculating out what I'm working for. I'm working for $6,000 this year. I'm working for $500 a month. And I'm working for $125 a week. You guys ever think you could make a 20% return with $125 a week? Now, let me ask you guys this. Does this seem achievable? This might seem overwhelming. I got to make $6,000. I don't know how to do that. But doesn't this seem achievable? If we're taking $1,000 position, do you think we can find a trade or two that could make us 125 bucks? Right? So now we have both sides of our lane. We know how much we want to risk on a trade. We know our trade size, and we know what we're trying to achieve. Okay? This is focused-based trading, where we're focused on the result that we're trying to achieve. Now, can we do better than this? Of course we can. And I'll tell you, you'll often do better than this if you're focused like this. I have a sheet of paper on my desk every day. Every Sunday I fill it out. That sheet of paper, I fill out this information. How much I'm risking on trades, what my tolerance to risk is, and what I'm here to do this week. I do that every Sunday as preparation for my week ahead. Okay? And it stays here on my desk all week. As I go through the week, I actually keep track of my results. Okay? I just handwrite it down the margin. This trade I picked up, if I'm using this trade I picked up $75. This trade I lost $40. This trade I lost, whatever it is, I'm keeping track to see how I'm moving toward my goal. Okay? Now, I don't achieve every weekly goal. But I can tell you honestly, it's been a really long time since I've missed a monthly goal. So what does that tell you? If I don't always hit a weekly goal, but I almost always hit a monthly goal, what does that tell you? It tells me that quality is more important than quantity, right? That if I avoid over trading when I don't have a quality trade, taking those additional losses, it's easier for me to achieve my goal with quality trades. Does that make sense? Activity does not equal results. And long term, I'm meeting my goals. That's right. I'm meeting my goals, but what I'm trying to get at is that sometimes less is more. Being pickier about the trades I take. Okay? So let's run this scenario out for just a little bit, and let's think about this for just a second. Why is it important to focus on quality rather than quantity? Well, let's start out. Let's say I'm doing 12 trades a month. I average around 12 trades a month, okay? And maybe you do, maybe you don't, but let's say you average around 12 trades a month. We're just going to figure this out. If I win 6 trades, okay? And if I lose 6 trades, and let's say my risk tolerance is $600, or excuse me, $200 per trade. If I lose $200 on 6 trades, what's my losses? Right. So I've lost $1,200. And let's say, so my risk tolerance here is $200 per trade. Let's say my goal is that $500 a month. How much do I have to make on my winning trades to make this work? That's right. So I've got to make $1,700 on my winning trades to make this work. That's going to make me $500. All right. That reaches my annual goal. Now, did you ever think you could reach your goal by losing half the trades at that size? So if I have to make $1,700 divided by 6 trades, that means I need to win on my winning trades. I need to win about an average of $283 per trade. Now, in risking $1,000 on a trade to start the trade off, does that seem achievable? Yeah, it does, right? But what happens if we can eliminate one of these losing trades? Do the math here with me, guys. If I can win 7 trades and lose 5 trades, what do I have to achieve over here? $214. And all we did here, guys, all we did is try to remove one of our losing trades. Does it make a difference to be picky about the trades that you take? Isn't this proving that activity does not equal results? Just being busy and trading doesn't improve your results if you're not working to resolve the problems that's creating those losses. What if we could improve it just one more? What do we have to achieve then, guys? Do the math. What do we have to achieve? And I'm asking you guys to do this math because what I want you to do is actually go through this process. You can put together one of these matrices pretty easy, and you can think about the process. And we're using real numbers here, right? I'm not doing anything fake. $162. Is this proving that activity does not equal results? Just being busier doesn't equal results. That we can achieve much more if we're picky about the trades that we take. Am I making my point here? And by the way, what's this ratio? If we win 8 trades and lose 4, what's our win-loss ratio? Not quite 68%. Only about 68% of our trades being winners. We improved from 50% to 68% by improving just by 2 trades, eliminating 2 of those losers. Is it easier to reach our goals? Does this seem more likely or easier to achieve with a $1,000 trade? I mean, we agreed that this seemed possible, but isn't it easier here? Oh, is it closer to 67? All right, 67%. We'll just call it 67%. We haven't even achieved the real target zone that we want to be, somewhere around a 70% plus. Quality is important to our trading. Quantity, not so important. Activity does not equal results. So how do we go about achieving this? How do we go about eliminating these losing trades? Do we do it by speeding up and chasing around trades even faster during the day? No. We do it by slowing down. By slowing down and being choosier about the trades we take. Okay? Would you guys say we're in a volatile market right now? News-driven, volatile. Okay, so if we're in a volatile market, market's whipping around all over the place. Do we increase or decrease our odds in a volatile market by being more active? Right? But isn't it funny when the market is whipping around like this and the volatility is like going crazy, we tend to actually rush more, don't we? It's that human emotion, I'm missing out. We tend to rush more during those kind of markets. At that point in time, we're actually decreasing our odds of reaching our goals. Is this making some sense? When the market is really, really volatile, we want to be pickier and pickier and pickier about the trades we take. Okay? We decrease our chances of a winning trade when we're chasing around volatile markets, trying to increase our activity because of that fear of missing out. This is the time when we need to be thinking about slowing down, being more choosy in our trades. Okay? Now let's think about when we put a trade together. When we put a trade together and we have an entry point on that stock, we have a buy signal, and we have an entry point here, and we look at the price action of that setup, and our stop loss is under here. Okay, now under my rules that I just went through, that I can risk $200 on a trade, I'm going to plan a $1,000 size trade. That's my trade size, somewhere right around there. If I put that trade together, and from my entry point to this point, it's $225 risk. Do I take this trade? No. Because we've done the math, right? We know that we've got to work pretty hard to reach our goals if we're not getting up in that really high range of win-loss ratio, right? If I'm not up in that really high range of win-loss ratio, if I'm losing more than my tolerance of risk, it's just going to be almost impossible for me to reach my goals, right? You guys ever think about that? How we take our winning trades so quickly, but we let our losers go and go and go, and we make it virtually impossible for us to win. Right? Now think about this. While we might find a trade that risks $225, if we work just a little bit more, focus just a little bit more on the risk of a trade, do you think it's possible we could do this same trade and find something that's going to risk us $125? The answer to that is yes. if we're pickier about the trades we take. Now, let me ask you this. Can you take more losing trades, take more hits on losing trades if you're risking small amounts than these larger amounts? Yes. Okay. That's why it's important to understand how much we're risking in a trade. Even though we have a decided that we can take a max risk of $200, that doesn't mean we have to risk $200. If we can work harder, work smarter, I should say. If we can work smarter and find trades where we don't have to risk that amount, we're actually helping ourselves here, right? But isn't it true? We're often in such a rush to find a trade, we don't even calculate how much risk we have in that position. We don't know. We know NIO is moving. Man, this thing is a rocket ship. But we never once take the time to think about that one trade in NIO might actually risk us even double or triple what our actual risk tolerance is. Okay? So we have to be thoughtful about that process. We always have to be concentrating on the fact of how much we're risking in a trade. We need to know that before we enter. Now, the second part of that we have to think about in a trade is we have to think about, we find that nice entry signal in that trade. We also have to think about what we're trying to achieve. I'm trying to achieve $125 in a week. Now, I may not choose to go after a whole $125 on every single trade. Maybe I just choose to go for half of that on a trade. That's fine, if you want to do that. But let's think about this for a second. How many times have you guys taken a trade where the stock is literally in a downtrend and you're trying to pick the bottom down here, and that next resistance level in the chart is not going to even come close to achieving you that 125 potential goal? Are we doing ourselves a service or a disservice by playing that game? Tremendous disservice, right? We have this desire to be the world's best trader, to pick the perfect entry. But guys, that's bunk. That's crap. It's complete and utter crap. Because if we're working toward a goal, does it matter if we pick the perfect entry? Or does it matter if we pick the lower risk, easier entry? The higher probability entry? Less is more, right? It doesn't matter if the stock's down here or if it's all the way up here. If the trade up here is a better quality trade, this is the trade I want, not this one. Okay? Make sense? So how do we go about setting up some rules on this? Well, you guys know my rules. Okay? I only trade stocks that are trending. I got to get a different color here. That dark blue is hard to see on this. I only trade stocks that are in a trend. I only trade stocks that are trending with the direction of the market. That means I'm not counter trend trading. And I've asked this question many, many times. Have you ever heard of anyone that has built a career gotten rich in the market by counter trend trading, going against the market. I've heard a lot of people give lip service to the counter trend trade. I've never ever seen anyone get rich doing that. So I trade with the direction of the market, and I trade only stocks that are trending with the direction of the market. Okay? That's right. Consider the broad market direction. And honestly, well, here's a couple true statements. The stock market normally goes up, right? The majority of the time, the stock market is bullish. But here's another fact. The majority of the price action time spent in a chart, the stocks are going sideways. Right? They have short bursts of energy up, boom, 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 and then they go sideways or rest. They spend more time in sideways resting patterns than they do going up. Okay? So, if those two facts are true, does patience and discipline apply to our trading? Of course, right? If those two facts are true, we can see these trends developing, and we can see these stocks moving up. But then our job as the trader is to be patient and wait for the next entry into that trade. Not to chase this trade. That one's done. It's already moved. Our job is to wait and be patient for the next entry into that trade, to follow that trend. Okay, so patience and discipline are extremely important for our success. Again, less is more, being choosy. Activity does not equal results. Quality over quantity of trades. Okay, so we have to be patient in our trades. We follow a set of rules. I only trade stocks that are moving in a trend. I only trade stocks that are moving with the direction of the overall market. I only trade stocks that show me a buy signal. I do not trade stocks with the idea that I can predict the turn. I can tell you the results of my trading after years and years of trying to do that, trying to predict the turn. I could only win 50% of those trades. Okay? Now, if I want to be a 70-30 trader, if I want to win 70% of my trades, can I keep taking 50% odds trades? Pretty simple, right? No, I can't do that. I have to take the higher probability trades. That means I have to be patient and I have to be disciplined if I'm going to get the higher probability trade. Okay? I can't just take anything. If I want a high winning percentage in my trades, I have to be patient. I have to maintain the discipline to wait for the trade. And sometimes, guys, you can wait on a trade. You can wait and wait and wait. Oh man, this is a great setup. This is a great setup. And the next day it gaps up here. Yep, it sucks. That happens. Stinks on ice. But what is your next response? Do you chase that trade? No. What do? We wait for the next entry into the trade. We're patient. We follow a set of rules. We follow a set of guidelines. I'm telling you guys, this stuff will change your trading life. It has to. It automatically changes things when we step back and we create a business plan rather than racing around chasing a candle pattern. Because isn't it true, when we're in the rush and the race, the only thing we're looking for is that hard right edge candle. Oh, there it is. I got to jump on that. Well, what if that hard right edge candle is actually up here? Stock has moved up, pulled back a couple of days, and that hard right edge candle is up here, and trend is out here. What do you think? Whoops. Trend is out here. What do you think this stupid thing. What do you think the chances of us winning if we race and chase that trade? Did we increase or decrease our odds? Yeah, we decrease our odds when we chase that. Because if we're only following trades that have low risk entry, do you guys think this has a low risk entry here? No. This high volatility automatically says there's higher risk in that trade. So we need to wait for this to spill off that volatility, to rest, maybe even come back here to trend before that trade goes. Patience and discipline makes the difference in our trades. Okay? If we want to win at a higher percentage, then we have to be pickier. We have to be more discerning about the trades that we're in, that we're thinking about trading. If a stock, if something is very elevated, it's run really, really fast, and that draws everyone's attention. It's a stream of that. When we get those big runners in the market, it's a stream of that through the room. Should I trade this? Is this a trade? They never think, because they look at that candle, they're not thinking about the risk in that position, that they're actually decreasing their odds of a win by chasing that trade. And they're probably going to end up with a higher loss than what their actual risk tolerance allows. But they're so involved in trying to rush to that candle that they don't think about the consequences of doing so. You're exactly right, John. You're exactly right. Moth to a light, moth to a flame. Okay, so we have to think about deliberately where those trades are the best trades to take. Okay, now people ask me all the time, how do you avoid, or how do you make sure to follow a set of rules like that? Take a look at some of these trades, like Boot. Okay, notice that I've placed an alert here on Boot. Now, I said I placed an alert here on Boot. Why have I not already bought this? Because of patience and discipline. I know that we're heading into a weekend. I know that we're heading into a holiday week. I also know, because I've drawn this trend, that this is likely to still move over to trend. Notice right here, guys. Right there. You see that buy signal that popped up here? Stock moved up sharply, pulled back, and there's that buy signal. How many of you have jumped on that buy signal? Not only that one, but that one and one of these. Maybe this one that popped through right here. One point in the day, jumped up there, and you had a buy signal. That's right. It's That's more of that chasing trade, right? We're rushing to the trade. We're not recognizing the fact that this stock tends to move off of its trend. Yes, we can have those extraordinary moves here for a period of time where our trend really steepens. That's okay. You can trade these off of that really quick trend as soon as that trend is shown. But if you chase these trades and jump too soon, and here's a couple other problems in these trades. This is the choice of being pickier or not being picky about the trades. It's eliminating that losing trade. That's what I'm trying to do. I'm trying to eliminate that losing trade, not because I don't want to trade, but because I don't want to take that additional loss. We've all done this, right? Every single one of us has done this, where we jump on this candle because, oh man, look at this thing moving, and we completely ignore this, that resistance level right there. We have really set ourselves up for a trade that probably can't make our goal. And because of the high volatility, probably took more risk on this trade than we were really comfortable with. It was away from the trend. We were rushing to the trade. And what occurred? We end up getting stopped out. How many of you guys have been stopped out on those trades over and over and over and over and over again? How many times is enough? How many times is enough to say, I'm going to stop doing that? You know, that's what I finally did. I was banging my head against the wall. I got the scars from it. Activity does not equal results. Me pressing and pushing for a trade, if it's a bad trade, is stupid. I would rather keep my capital than just be the brave guy that's always out there pushing trades. Got to trade every day. Got to trade every day. No. That doesn't grow accounts. That doesn't grow accounts. Yes, Dee Dee, certainly in this news-driven market, we have that potential at any time and any day that we could have a news event to really move us. But that should not be the excuse. Okay, we know that is the case. So what does that mean? That means we want to be pickier about the trades we take, right? We want to take the lower risk trades. Don't blame it on the market. The market's this way. It's always been this way. It's always going to be this way. The problem is we're chasing trades without the thoughtfulness of a plan. We're taking too much risk on trades because we just can't prevent ourselves from jumping into the market. We're actually racing to our own losses because we're not patient and deliberate about the planning of our trades. Okay? Thomas, if the price is too high, you can't take the trade. That's all there is to it. Okay? I understand that dilemma. I understand when you just can't take the trade. And honestly, there's a lot of trades right now that are just so expensive because options are so high priced. Your job is to stand aside and wait for the better trade. Or maybe think how you want to change up your strategy so that you can trade more trades. Credit spread trades are a great trade for, and those are directional trades as well, but credit spread trades are great trades for reducing that risk and giving you the ability to trade those higher priced stocks. Okay, but there's a strategy that you have to learn. There's a detail that you have to learn. Just because your account is small doesn't mean it can't grow. Okay? It can grow, and it can grow in this market. Okay. We do. There's lots of gaps and lots of things. So what? Just because you miss a trade because of a gap, does that mean you break your rules, DD? Are you being disciplined? Happens to me all the time. I wait and wait and wait on a trade, and then it gaps away. But that doesn't mean I break my rules and chase that trade. It means I just have to wait for the next trade or find another trade. There's days when I do nothing, and I'm okay with that because I know less is more. Either I have my trade set up or I don't. It's not about activity. Again, that's what the purpose of this entire class is. It's quality versus quantity. Activity does not equal results. The same thing is true if I'm in a trade and it gaps for me. If I'm in that trade, we did it the other day with FCX. I bought an option on FCX the next day. Bought it on Friday. On Monday, it gapped up. I closed the trade. It was only 11.5% gain. I closed the trade. Anytime a stock gaps immediately after I'm in a trade, it's a reason for me to take the profit. I did my job. I made money. But how many of you guys wouldn't take that trade? Would sit there and you would stare at that candle all day long. And by the way, you probably would have ended up selling it out right there on that pullback candle. And you would have spent your entire, for 2 days, you would have sat there and watched that candle wiggle around. Wasting your time. It gapped for me, I closed the trade. That's discipline. My job is to make money. I made money. Only if I have a big enough position on to be able to do that, John. Let's think about this based on our rules and our guidelines. I think this is important as well, and I try to counsel people on this all the time. Based on our rules and our guidelines of our trading, if I'm trying to achieve $125 a trade or $125 a week, that's my goal, that's going to get me $6,000 a year, 20% return to my account. If that's what I'm supposed to be doing, if I trade a one contract trade and this occurs, what's my job? What am I supposed to do? No guessing, no thinking, no nothing. I'm supposed to take that profit. Okay? Simple. No negotiating. Because we know in this market, the next news report, 20 minutes later, that money could be gone. Right? So when I achieve what I'm supposed to achieve, my job is to take the profit, not negotiate with the market, not try to squeeze every penny out of it. None of that. I did my job. I made money, closed the trade. Okay. Now, if you're a two contract trader, I want you to understand when you go to two contracts, this is a 100% increase in risk. Whoops, not a dollar, 100% increase in risk, right? You've doubled up. Most people don't think about that. They've doubled up. So let's think about this. That stock moves in your direction for you. Okay? That stock moves up, and here we are again. We're letting greed get in the way of good decision making, right? Stock moves up, and then we try to negotiate. Well, maybe if I just sell one contract here, and then I'll trail the other. and then the next day the stock gap's down here. Did you make any money on this trade? No, you didn't. You broke even, maybe even a loss. So what I always tell people, if you're a 2 contract trader, your job is to take the profit. You can't get fancy yet. Okay? So now we graduate. We're a 3 contract trader. We move up to 3 contracts. Right Way Options folks will see me do this a lot. I typically trade 10, 15, 20 contract trades. I get my move where my goal is in place, and I will close 75% of the trade. So that means here, I close 2 contracts. Now, if I close 2 contracts and I'm trailing 1, even if I get this gap down situation, can I still probably pull a profit out of this trade? Won't be great, but I can still probably pull a profit out of this trade. You see why this makes sense, guys? Same thing is true if you're a 4 contract trader. Sell 3 here. It's about impossible for you to lose money on that trade at that point. Okay. We covered that at the first part of this video, Ron. I usually recommend 3 to 4% of your account into any one trade. That's not the risk of the trade, but that's the size of the trade. Particularly, and that's for options. So if we're going to get fancy and try to trail a trade and try to squeeze anything out of it, extra out of it, then we need to make sure that we're locking in our goals. Okay? We can achieve way over our goals. Okay? But we have to be locking them in to do it. Let me ask you this question. You are a 1 contract trade. The stock gaps up and you're up 225. What do you do on that trade? That's right. You don't negotiate. You don't try to squeeze it. You don't try to fancy it. You don't try to put a trailing stop on it. The first thing when the market opens, close that trade. Put that money in your account because you have just gone way past your weekly goal. Close the trade. Stop letting greed make these decisions for you. Follow your rules and your discipline. Okay? Is this making some sense, guys? This is how winning traders win, and it's how winning traders win consistently. Because they follow a discipline, they follow a guideline. Okay? How do you figure an option delta in a trade? You mean when you're trying to just kind of figure out how much you're going to make or lose? If you take a 70 delta option trade, you take an in the money, this is just a directional trade, in the money, call option, 70 delta. And you're trying to make 125 bucks on a trade. How far does that stock have to move for you to make 125 bucks? $2 or less. It's going to be less than $2. $2 is $140. We want to make $125. $2 is $125. Plus, remember, we get the boost of gamma. And if we get a boost of IV as well, it can happen faster than that. Simple way to calculate. Okay? We know 70, we're going to make 70 cents for every dollar that the stock moves. Minimum. So it's simple, right? Simple to kind of figure out how far does the stock have to move to reach my goal. That's why I trade for goals. I don't trade to be right. I don't trade to get rich quick. I don't trade for the big hit, the home run hit on every trade. I trade to reach my goals. Okay. So remember, let's say gamma in here is 5. If you have a 5-cent gamma, by the time the stock moves $1, your delta will be at 75. Okay, so that means you made 70 cents plus part of this 5 cents on the way up to that $1 move. Okay, so you've probably got 73, 74 cents, and now you're at 75 cents for the next dollar move. Okay, so you're going to make that faster than that $2. Okay. And by the way, there's videos on this in the members page. Go to the option basics. If you don't understand your Greeks, you need to understand those Greeks. Basically, your gamma is the delta of the delta. It tells you how fast your delta is going to change based on a $1 move. It's the speed of the delta, or the acceleration of the delta. Okay, make sense? Yeah, about $1.66. With that scenario right there, about $1.66, and you've got your 125. Okay. Now, one of the things that I think can help a lot of people, and I'm just going to show you this in a chart. I'm going to go to my 3/8 trap chart, get rid of all of these lines, and I'm just going to get rid of the 3. I'm going to get rid of the 8. Okay. When we're thinking about trading, this is the trendinator. Rick calls it the trendicator. It's basically the 17 EMA. Okay. If we see a buy signal, this is one of those really quick and easy ways to improve your trading. Okay. We see a buy signal like this nice bullish candle that pops here. Okay. Darn thing. We see this nice bullish candle, or even that one right there that popped up. It was bullish sometime during the day. And if I have a choice to pick this candle or this candle, which one do you think I'm going to pick? The second one. That's right. This one has more risk. Remember, I can take the more small losing trades if I plan my risk to a smaller out. This one here requires a stop loss pretty steep, right? I got to have a stop loss pretty steep underneath this one. This one is a higher risk trade. This is a very low risk trade. This is the easier trade to make money on. Now, this trade can still lose. Don't get me wrong. This trade can still lose, but I lose less money on that trade. It's the pickiness of the trades that you take that make a difference in your end result. Okay? When we see stocks like this, is this a smart trade for anybody right now? But isn't it true? Everybody was talking about this stock the last few days. Everybody. Oh my gosh, look at this thing. Is this a buy? There's no way this is a buy. But that doesn't mean you can't take these highly volatile trades, right? What if we entered that trade here? Or we set an alert and we entered that trade here? Could we do that? Maybe. Maybe the tolerance to our risk would allow those trades. Here, this is no trade. This is dumb money chasing. Okay, so we have to be pickier about the trades we take. We have to be disciplined to our rules. FCX. FCX is one of those trades right now. I want to be in this trade. Let me show you here. My entry, my last entry into FCX was in here. The low risk trade. When it's up here extended away and I'm away from my trend, I have no interest in the trade. Yes, it's bullish. I don't care that it's bullish. It's not my trade. The discipline that we have to follow as a trader is to know when a trade is our trade and when it's not. I'm not going to risk on a trade that has too much risk. I'm going to let this stock do what it needs to do, and eventually it will come back to trend, and I will get the lower risk entry. I trade less, I make more. Activity does not equal results. Okay? Be picky about the trades that you take. Be focused and disciplined to the right entries. This entry right here, look at that entry right there. How sweet was that? Easy trade, low risk entry. Those are the trades that you're looking for. We're not looking for those trades that the stock has already moved big and we're trying to chase it up. That's asking for a beating. Thank you, sir. Can I have another? Right? Be disciplined to your trade rules and the setups. So if you learn anything from this today, it's the idea that we are hurting ourselves as traders by thinking that if we rush or hurry, the more activity that we put in, the better it's going to be. And that is just absolutely not true. It's the quality of the work that we do that makes the difference in our trading results. Okay? If we can eliminate those mistakes that we're repeating over and over and over again, we can increase our win-loss ratio. We'll have an easier time of reaching our goals in those trades. And if we only risk on trades that either meet or are better than our tolerance to risk allows, we're more comfortable in our trading. How many of you feel you're so out of control right now, you're never comfortable in your trading? It's because you're not following a set of guidelines and a set of rules. If you want to be comfortable in your trading, if you want to actually enjoy your trading, it means we follow a set of guidelines. Okay? Sometimes it depends on the market, DD. Sometimes and I would say the majority of my trades happen early in the week, not toward the end of the week. I'm more of a profit taker toward the end of the week. But one of the reasons a lot of my trades happen early in the morning or sometime in that morning period is because I set alerts. Okay? If you take a look at NIO, I set alerts on trades. Okay, and when those trades pop, I'm ready for them. Okay, that means I'm prepared ahead of time. I'm ready for those trades. And that's why sometimes they come early in the morning, because that's when the market gets that first burst of energy. But it's usually not within the first few minutes. In fact, what you're going to find within the first few minutes of the market, it's when I'm closing trades, taking profits. Okay. Yeah, Bob C has been holding solo for some time. He took a great big profit, but he's been holding it for quite a while. Okay. So if you want to be in solo, follow some rules. I showed you 2 potential entries in solo that weren't too bad. Follow those rules, and you could have had that great big profit too. But you've got to be disciplined to enter those trades at the right time. The other thing about Bob C that you guys don't understand, he's trading a huge account. Okay? And not only that, he doesn't care if he's backwards in a position by $5,000, $6,000, $7,000. That's okay. He will hold that trade. How many of you have a tolerance for that? Don't compare yourself to another trader. Bob C makes that work for him because he's got that large account and he's got that discipline to hold through big losses. Is that you? Don't compare yourself to another trader. Compare yourself to your rules and your guidelines. One of the things that I think really hurts a lot of people is they try to compare themselves to another trader. Every trader has different hangups and problems and issues. Our accounts are all different size. We have different tolerance to risk. We have a different view of the market. We have a different view of a chart. I can have a very bearish view of a chart, and you can have a bullish view of the chart, and you could be right and I was wrong. Okay? Don't compare yourself to another trader. Don't compete with another trader. Compete with yourself. Are you achieving your goals? You see, think about this, guys. If your goal is 125 a week, compete with yourself. Don't worry about what somebody else is doing. Did I get it this week? And did I get it that week? And did I get it this week? And did I get it this week? Because now I know I've reached my monthly. That's what I'm after. Compete with yourself. Work to improve yourself, not try to trade like someone else that probably trades nothing like you or doesn't have the same account, the same experience. Trade against yourself. Compete with yourself. No one else. Okay? I say this over and over and over. When I call a trade in the room, if I even have an inkling that people are just trying to copy what I do and follow along and don't do any work or anything like that, that's a reason for me to boot people out of the room. Because that is not effective trading. That's bad stuff when you're just blindly following someone else's trades. You still have to put in the work, right? Because I'm a different trader than you. I've been doing it for 30 years. I've built my account. You know what I'm saying? I'm a different trader than you. So you have to look at that trade and determine whether or not that trade is right for you. And it's okay if you look at that trade. I will post a trade, and I know Rick will sometimes probably look at that trade and go, I don't get it. What is he looking at there? And I do the same thing with him. I don't get it. I don't know what he's doing there. I don't take those trades. I don't care if Warren Buffett comes to my house, knocks on my door, says, Campbell, if you don't take this trade, you are out of your ever-loving mind. And I will tell Warren Buffett, doesn't fit me, it's not my trade. That's the discipline of following a set of rules. Okay? One of the things that I get lots of comments about and hit and run candlesticks right way options from people is that I never appear to be rushing or emotional about my trades. And it's because I'm not. I really am not. I have transferred all of that into a business plan and I follow my business plan. Okay? There's no emotion in it whatsoever. It's either a good business decision or a bad business decision, and that's all. There's no gray. It either is a trade or it's not a trade. There's no gray area. It's black and white. Being bored is definitely an enemy, and that harkens back to that whole thing about you just want to be active. You want, give me a trade kind of thing. Dee Dee, you've probably experienced this. That boredom is put you in a situation when you've talked yourself into trades that lost money just because you wanted something to do. Here's what I would say to that. There's not one of us here right now that doesn't have something else that we can learn about the market. Not one of us. When you run into those bored times when the market is just not providing, like all day yesterday, it really wasn't showing momentum. It was just boring, right? That's a great day to be refining your watch list, setting up potential trades that are coming, learning something about your brokerage system, studying price action, doing anything but allowing yourself to talk yourself into bad trades because you're bored. Study. That's a time where you can use to improve yourself. Okay? Drives me crazy. People will tell me they're bored, and then that same person will come back and I say, well, place a conditional order stop loss on it. And they say, well, I don't know how to do that. One of the worst things my kids could ever tell me, Dad, I'm bored. Oh, really? I got something for you to do. We can work to be more efficient and work to improve ourselves as traders during those times. We do not have to sit here and stare at charts wiggling around, talking ourselves into bad trades when the market has no momentum. Does that make sense, Dee Dee? We can all improve ourselves. Okay. So guys, I'm going to cut this off here, and I want to say thanks for being here today, and I hope you got something out of this. I know this wasn't one of those real exciting classes, but it's one of those classes that really can make a difference in your trading. When we really stop and we think about what we're doing to ourselves, and isn't it true? We're doing it to ourselves. We're creating these problems, and we're doing it to ourselves. And if we can work to fix those problems, be more disciplined, be more focused, be more rule-based, following a trading plan, then we can improve ourselves as traders, and we can actually help others improve as well by our example, by just saying, this is what I do. I'm disciplined to this. That means sometimes I have to wait. Actually, it means oftentimes I have to wait. But it also means that I win at a higher win-loss ratio because I'm picky. Okay? I only have a finite amount of money. We all only have a finite amount of money. I can't take every trade that pops today. I'm not even interested in taking every trade that pops today. I want the trades that set up for me. Those ones that I've looked at, I've planned for, I'm ready for. Okay? That's what makes a difference in your trading. And if you can get to that place, and I know you can, because if I can do it, anybody can. Okay? Max, there really is on some of these high flyers. There's no doubt about it. They're high risk trades. You take a look at the implied volatility of Solo. The implied volatility of Solo is ridiculous. %200. Take a look at NIO. These are highly speculative trades. 100, 110, 112, 115%. These are highly speculative trades. You can make the decision, Max. I just don't want to trade these. Again, that's setting a rule and being disciplined to something, right? Hey, I see everybody trading these, but that's not me. I'm not going to trade that. I want more deliberate. I want more surety in the trades that I take. That is perfectly acceptable. Okay? Remember, don't compare yourself to someone else. I've made a rule. I don't trade biotechs. I get criticized from people all the time. You take biotechs was one of the greatest sectors of the market this year. You stupid not take. I don't trade biotechs for the same reason that I don't trade highly volatile stocks, because I don't win enough on them to make it worth the risk. If I go back in my stats on all of my biotech stocks, I win about 50% of the trades. I want to be better than that. I identified that. I can only win on about half the time. And I'll bet you anything, if you go back and review your stats, you only win about half the time on them because of the volatility in them. I choose to be better than that. When I can only get a 50-50 win-loss ratio on any strategy, I don't trade it. I want to be better than that. Sure, you can get some really quick gains on them. You can also get your guts ripped out. So I made a rule. Don't trade biotechs. Simple, black and white. I follow it. I don't trade biotechs. Make sense? So make those choices yourself and say, look, this is just out of my wheelhouse. I don't feel comfortable here. And it's perfectly acceptable to say that. And I don't care if every other person in the room is trading that way, and you look at that and say, I'm sorry, that's just not my trade. I'm going to pat you on the back and say, congratulations for your discipline, because that makes a good trader. Know who you are as a trader and be that. Don't let anyone else influence you or push you into the higher risk trading that you're not comfortable with. Make sense? Be you. Trade as you. Uh-oh, B12 fell asleep on his keyboard. Make those decisions, and it's okay. I don't care how much people criticize me, and I get emails on it all the time. You are absolutely out of your freaking mind. This is the best sector in the market this year. I don't care. I made my goals. I didn't have to trade the high risk stuff. I don't care. I trade the way I trade. You trade the way you trade, but follow a set of rules and guidelines. And isn't that the truth? You remember when you were in your 20s and you just felt you're so awkward, and you're not. You try to put on this air of confidence that you got it all figured out, but you don't. Okay? Isn't it funny, by the time you reach about 40, 45, 50, all of a sudden you kind of feel comfortable in your skin. Kind of know who you are as a person. Hopefully, you figured it out. The same thing has to happen in trading. You have to figure out your place, the place where you feel comfortable in your skin. Okay? This is who I am. That's why I don't day trade. It's not me. I can do it. I don't enjoy it. I don't like it. Okay? It's not me. Does that make sense? And it's perfectly acceptable if you say, well, hey, day trading is where I'm at. That's my thing. Great. It's just not me. And I'm going to tell you, great, I'll get after it, get her done. But it's not going to influence me to change me, because I know where I am and I know where my comfort level is. Find those places, find that, and your trading smooths out. And you start to enjoy the process of trading, because it's just a matter of evaluation, finding those good quality setups, and following a set of rules. It's black and white, it's disciplined, it's mechanical. You enjoy it. It's not this angst all the time, this race and this emotion and this anxiety all the time that people are trading in the market. Work to eliminate that. Get your discipline in order, get your patience in order, get your plan in order, and you'll start to see better results in your trading. All right. Thanks, guys, for being here. I truly appreciate it. You guys are awesome. And yes, I plan to rest today. I'm going to get over this, and all will be well. Thanks, guys. Thank you so much for being here. You guys are welcome. Y'all take care. Have an awesome, awesome weekend. I wish you all the best. Be safe out there. This COVID stuff is nasty, nasty, nasty out there. Be careful. Catch y'all next week, bright and early Monday morning. Thanks, guys.